So anybody that saw any of the social media posts that we did, we just thought, the final countdown was ringing in our ears, and I blame Jack Santaniello for this whole thing because he started it with the Van Halen thing a few weeks ago, and then last week we did the Wayne and Garth thing at Adam's house, and then it just seems like it has a life of its own. So actually, I have some really good news. That's hopeful news in spite of all of this mess that's going on. So just a reminder to everybody that's jumping on here, hit the Q&A for questions. We do have some questions that came in, and I'll tee those up. Use the chat to harass us. And what I want to do is I want to with one positive thing, because there's a lot of negativity out there, and half of the country is going to be PO'd about whoever wins. So that's pretty clear. But here's the good news. I got a note this morning from a friend of mine, a childhood friend in Kansas that owns a company. And he goes, hey, we got full PPP forgiveness. And he said, I was really skeptical. It was 60 days from the time that they applied for forgiveness, and it was over $1 million PPP loan. So
cool.
Front, I thought that was really cool. So Adam, you have any thoughts before we toss it over to Jack, and then we'll dive into some of these questions and other thoughts?
Yeah, I do. I got this from a friend of mine, just, because, I've got to go on a little political tangent here for a second since I'm political junkie. So
out.
Yeah, so calm down for a minute, Jack. It's okay. So this is what I got. And I totally believe in this statement, all right? It's happening. I've seen a lot of hate spewed in recent days about a man who is a constant winner and overachiever, and that what the people who support him like about him. Yes, he's been caught in some lies and maybe twisted the truth a little, but he's still out there proving his haters wrong time after time. Some people are just jealous of someone who is successful and has money. Throwing a hot foreign underwear model at his side and they hate him even more. You may not have wanted him in the role, but he's there now and there's nothing you can do about it. I know it's possibly just going to get worse over the next several days, but like him or not, Tom Brady is turning around the Tampa Bay Buccaneers.
Total twist at the end.
Jack's like, I can't believe he's saying this on the webinar. I can't believe he's saying this on the webinar. But I actually have to give credit to my brother. He's the one that sent that to me, and it was freaking hysterical. But so I forwarded it around too. And it's like everybody always says the same thing, like either right on and then I really read it and started laughing, or they're saying I barely got through it but then I cracked up at the end. It's been equally divided. But anyway, a couple things for this week. Obviously with the election, it's a big deal. I think as we've said before, regardless of who comes into office, we're gonna see a deal. And my optimism on the Senate side is really carried from the fact that I think it's pretty highly likely that the Senate will not change hands, just the way the things are shaken out, and the fact that I think the two Georgia races are going to remain contested until January, just the way the vote split from the last I heard. So we're not going to know anyway. There's going to be a lame duck session, and we weren't going to know anyway. But I think what will end up happening is that because there was just an election, and just to be clear for everybody that is on the webinar, look, I don't like that we do deficit spending as a country any more than the next guy, because I don't like the debt, and I don't like saddling my kids with the debt either, and their kids and their kids and their kids. And at the same time, we're not super great about figuring out what to spend money on and what not to spend money on globally. It doesn't matter what party you're in. And at the same time, when you're in the middle of a freaking crisis and a pandemic, now is not the time to start talking about a damn budget. my point in saying all that is because that's what the government, that's why we pay taxes, for reasons like this. My point in saying all that is that what I think will end up happening with this is that, all the, there's no appetite for that in the Republican Party. There's still going to be some budget hawks that exist within the Republican Party. But, if you just think about, what actually happened, you had, Martha McSally, what is she going to care about how she votes? Because she just got voted out. Susan Collins, barely, beat the Democrat on her end. She was always kind of independent. Richard Burr is retiring, from our state. So I just have this feeling that that's too much money to spend, we'll never get behind it. I think past the election, it's like, that's not really historically the Senate's mode of operation. When you're a Republican senator, it's usually a much cooler head prevails when stuff like this comes up. So I really do think it doesn't matter. I do feel optimistic that something's going to, once we get past the count, because that's going to occupy everybody's attention. Stuff's gonna happen pretty quickly. So I'm positive there. At the same time, we'll talk about it more on the call, but some of you may have received some rumblings from people that said, hey, the SBA just came out with their audit guide for companies that received over $2 million in funding. It's just a draft, but it does kind of get to, or it confirms a lot of what Jack and I have been talking about on the call around the documentation of your thought process is like the line of questioning that occurs in this 9-page questionnaire. So that's what I've got for today. I'm going to go for a run after this. So I opted for this not being a shower in the morning type of day. So
it's a good thing we still don't have smell-o-vision.
Right.
Well, it's funny because my new favorite logos are 80s on 8 and also the Spotify symbol. Because yesterday I had enough and I had it on. I was working from home, had it on in the background, and I was like, I can't see anymore. I turned it off, and just the pounding headache of the numbers back and forth. And we're not going to know for a while. So, so two things. One is that I believe something will happen now, because if the Senate stays the way it is, the House stays the way it is, then let's go ahead and negotiate. And I'd be okay with, and I think the American people would be okay with, if when it goes to the White House, if there's 2 lines on the presidents to sign, co-presidents of the United States, one for Biden, one for Trump, let's just get it on and, be done with it. So, but your point about, or bringing up that the whole $2 million thing, I found a really good summary of what is required, at least currently in that form, and it's maybe 10 bullets. So I'm just going to read them off really quickly so that people have some familiarity with what that really means if you're in that category. So they're asking for, it's kind of a comparative analysis. So they're asking for borrowers' gross revenue in the second quarter of both 20 and 19, expenses of the second quarter in 20 and 19, were you ordered to shut down by a state or local authority due to COVID-19? So everything that I say pretty much because of COVID-19 is kind of the way the sentence ends. So ordered significantly to alter its operations by governmental authority, voluntarily ceased or reduced its operations, began any new capital improvement projects, the cash and cash equivalents at the end of the last quarter prior to the loan application, if you paid any dividend or other capital distributions in excess of what you had to do to pay taxes during prior to the end of the covered period, borrower prepaid outstanding debt prior to the end of its covered period, employees received compensation in excess of $250,000 on an annualized basis, if any owners received compensation in excess of $250,000, so it's employees and owners, and then if the borrower received funds from any other CARES Act program. So this is, as Adam was talking about a moment ago, the beginning of the day of reckoning, which is, did you really need the money? And show us that you really needed the money by telling us about what money you had beforehand, what changes you experienced during COVID-19, and what are the economic impacts of COVID-19 on your business. So hopefully, if you weren't sure if you were going to be in that category of having to show the need, that hopefully you didn't spend it all and you kept some of it in a separate account. And to the extent you may have to give some of it back, what we don't know is, you know, what does this mean? Does this mean that now there's a clawback of part of it? You know, does it impact the forgiveness? Does it, I guess, depending on your certification of need and asking for forgiveness rather than giving it back, you know, so we just don't know what the implications are and what the right pathways are, because that's a lot of questions as to, well, what does it mean what if we did spend the money, we did think we had a need, but now based on all this stuff, I mean, if you look at the stuff, it's basically spending you know, $250,000 on yourself, on your employees, you know, and then did you really have an impact, and can you show it? The numbers are what they are. So it'll be interesting what happens with this in the next several weeks or so.
It's also high. I mean, it's such an armchair quarterback type of form. So not to get me on my soapbox while I'm doing it again, Gary. You know, my whole problem with it again is it's armchair quarterback, because you kind of go back to, if you're a construction company, first off, you've been burning off backlog, so your downturn is, you know, coming up potentially. The second, you know, even if so, let's say that your revenues weren't, you know, they say, oh, well, you weren't down 25%, or you weren't down, or you had a lot of cash in the bank. It's like, yeah, but I kept people on payroll instead of sticking them on unemployment. You know, fine. You know, if you want to do that, then I'm going to do this. So it really, when they said that they were going to audit people for need, I mean, it raised a lot of nonsense, or it raises a lot of, comes back to, it's just, how are you going to prove what was in my head? You know, I can show you what my thought process was, but at the same time, are we not going to then argue about, well, what would I have done versus what I actually did since you gave me the money? Because the end result is, you know, I think for a lot of our clients, at least, there would have been a lot of dang people on the unemployment line, even if things were flat or slightly down, because I mean, we would have advised people to make preemptive moves. Not that, I mean, we're not heartless, but we saw a lot of clients that that held on for too long during the recession, which this is the closest event in my time frame that I've been in practice that I've experienced. We saw people hang on for too long with a lot of cash, you know, and then make changes in little trickles. And we would have said, well, look, I mean, did we not learn anything from recession? We can't do that again. You know, it's as bad as it sucks, we got to do blah. And I think that for the most part, they would have done it before, you know, dipping into, you know, retained earnings, simply because they hadn't. I mean, you can't have this form without then having a question of, well, what are the working requirements for a business, and was there excess working capital? Because I would like to point out that if you were a C corporation in the U.S., one of the audit techniques that the freaking IRS has is called, is there excess cash and you should have done a dividend? You can't have it both ways, folks. And Jack knows that I would love to be an attorney one day when I grow up, and I would love to argue this one in court. It's one of the few times I'm probably going to agree with you, David Worrell, because I would take this one to the mat.
I mean, that's the prime example. I mean, for example, even in an S corp, so you have money that's sitting there that is now post-tax money because the owner had to pay taxes on it. So, you know, could they have taken it out in January and bought whatever they wanted to? It's their money. But instead they kept it in there just because of, you know, in their minds, whether you call it net working capital or part of the working capital calculation, but it's their money. So, you know, they didn't transform it into, you know, booking it as additional capital contributions into the business. It's cash that's sitting there. So it's, you know, it's, you're right, damned if you do, damned if you don't. And for those who were using, and I call it using their corporate accounts as their savings accounts rather than investing it or using it, they're the one that it seems like at this point that it's a penalty to them when you're looking at the need And, would they have been better off in being more, and maybe in some cases, frivolous spending, just spend money because you need to spend it or else you're going to be penalized under this need calculation.
Right.
All right, you guys ready to dive into some additional questions, as well as this is a scenario that got sent to us via our website. And we've had actually a few questions that have come in, and where people were like, hey, you got a new website? Yep, we do. And it's pretty cool. But trying to find our COVID page was a little bit tougher. So if anybody wants to do that, go to trustbgw.com, then go into the menu area, and anything but typical. I know it's not as clear as it needs to be. We're working on that. But if you go into the anything but typical, you'll see the COVID section, and then there's a whole bunch of resources there, and then you can click on a green button and it'll expand even further. So we've had people say, hey, where's that Excel template? That's where it's at. It's under forms of documents. But this question came in through that website and said, hey, I listen to your YouTube podcast every week. Man, that's awesome. Thank you. I have a question about COVID-19 related employee retention credits, special issues for employees, income and deduction, section 139 of the Internal Revenue Code. Can you help explain this in your podcast? Ooh, Adam.
It would be helpful to know what the underlying question actually is behind this one. So if the person that raised this is actually listening, what are you guys trying? What are we trying to ask? Because fundamentally, what that employee retention credit is designed to accomplish is to allow you to take a credit for keeping people employed when your sales are down by a provable amount. And when they talk about sales, they obviously have to reference what's the IRS definition of a sale, which then gets back to income and expenses. So, really, what they're likely asking for is just, was your income down in the sense of the IRS definition of the word of income? I think when they're referencing this section, which I mean is what we all think of as sales. It's basically a sale that will result in taxable income of some form, or a sale in the sense of if you're not, I can't remember whether or not you can qualify. Why would you need the credit if you were, because the credit applies to federal withholdings and payroll taxes. So assuming, I believe not-for-profits still qualify. So it'd be whatever would construe a sale in the sense of a not-for-profit as well, I believe. So I think that's where the underlying question is going. But if you're on, hit us up, or if that didn't answer it, then make sure that you let us know, and we'll make sure we get something more clear out. And right there, Jack, you now have had the opportunity to search, try to fact check me on that. I bought ample time for you, buddy.
There's no way I'm touching a section of the Internal Revenue Code when I have the two of you on the phone.
Yeah, that actually is from Mary Kay, and she's not K-A-Y, but C-A-Y. And she's down with GWA Electrical Engineers down in South Carolina. So hit us up, Mary Kay, if we didn't hit what you needed. Also, all right, let's go to the next question. David is on. We'll get to you in a couple. First, going in, first out. Regarding the FTE safe harbor provision, do we have to go back to the same FTE level laid off to, or will it make a difference if we rehire one more?
No, it shouldn't make a difference if you hire one more. And I'll go back to the earlier question. I think what they're talking about there with section 139 is that if you make payments to somebody associated with a disaster, are they considered taxable wages to the recipient? And the answer is, if it were a true natural disaster like a hurricane, as an example, and I shipped over food to Gary's house, because Gary, I can't pay Gary because the power's out and I can't run payroll, but I can, get him food somehow. Technically, that's income. Does Gary have to claim it as wages? The answer is no. So COVID, though, is a little bit of a mixed bag because on the one hand, it's it's a disaster. On the other hand, for this purpose, if I pay Gary, I'm still freaking paying Gary. It's taxable wages to Gary. So back to the FTE. Back to the FTE question. If you hire more people, you're not penalized for that. I mean, it's basically average FTE versus average FTE, and it happens to be that your number's more, you should be fine.
Now, this person was anonymous, so I don't know who it was, but hopefully you're still listening. You may want to clarify. The other way you could read this is, will it make a difference if we rehire only one more? Only is not in there, but so if they laid off 2, but they only hired 1.
It's still the same challenge that if you had your average, it's average FTE versus average FTE. So if I'm thinking in terms of employee and 2 part-timers equals 1 full-timer for the purposes of average count, I had an average 1, I have an average 1. So you're really comparing averages. Thus, if you only brought back 1 more, you're asking for a qualified exception. And your 2 qualifying exceptions are, the government did it to me, which means that, revenue's down, I can't bring the position back, or alternatively, the government did it to me. I'm joking when I say that, but it's because, either A, the person refuses to come back because they're making more on unemployment, or alternatively, I don't care what anybody freaking says, man. If you've got a kid below, probably 9th or 10th grade, your butt probably needs to be at the kitchen table, making sure that they're still doing their stuff. If they're, if they're at least within Charlotte-Mecklenburg school system, because that's been the experience of what we've seen, at least with my center of influence.
Yeah, and it's recall kind of the quick history, which is the original safe harbor was if you rehire back, and they said that's just not practical. As time went on, and we really saw the actual impact of COVID on businesses and rehiring employees, whether it's because they felt uncomfortable coming back, whether it was because they're making more of an unemployment, whether it was the employer saying, I just don't have work to do, whatever it may be. But if it's COVID, if you can relate it back to COVID related, then you're in a different bucket of exemptions in the safe harbor. So you need to go through, and as I've said, go through the spreadsheets and just work through it and see if you can get to the result that you want to get to based on your facts and circumstances of what you had to go through over the past several weeks.
All right, next question. This is probably a repeat question. We've got plenty of those, and that's okay. I mean, everything keeps changing anyway. Probably a repeat question, but can you address Notice 2020-32? Jack, start typing. If we receive PPP loan forgiveness, does that make expenses covered by loan funds non-deductible such that we're in the same position regardless? What if we don't for or receive forgiveness?
It's the gift keeps on giving. Yeah, I was about to say, was that David that asked that question? Tell me.
No, the next one's David.
David's gonna find my house and start breaking it. Hey, you gotta stop saying that on the webinar. Yeah, and again, remember, it depends on which David asked the question. Now, so basically, as things stand now, it's taxable income, and the Department of the Treasury got cute in the interpretation, which basically said, well, we did follow the intent of the CARES Act, sir, because the loan itself is not considered taxable income, but you can't deduct any of the expenses. It's the same freaking answer. And the whole problem that we've had with that is that if I received $100,000, you know, the intent, this kind of goes back to the audit side of the equation, right? If I received $100,000, then, you know, the intent of the money was for me to spend the $100,000 on qualified expenses, which were wages and rent and stuff like that, not to reserve off $300,000 of it to pay the damn tax bill. Otherwise, I would have only spent 70 grand, or the polynomial equation that would have arrived at, you know, me not having to come out of pocket one dime, which was the whole intent here, to land me back at square and not have to put people on unemployment. So otherwise, you think the unemployment rate was as bad as it was, increase that exponentially had people taking out these loans thinking that this is what was actually going to happen. So, I think our advice has been that, while you can get granted forgiveness now, there's not too many really good reasons to do so, because, technically speaking, if this matter is not resolved by when your estimated tax payment or extension payment will be due, which will be April of 2021, pending any further guidance for the 2020 tax year. If you got forgiveness, you got taxable income for right now, buddy. Otherwise, if the question's still outstanding because you haven't received forgiveness yet, there's nothing in the tax code that says that you need to recognize income speculatively. It's usually as earned, and in this case, earned is called the loan was forgiven. Not it probably would be had I not delayed the application. So, I know I've gotten some questions from clients saying, hey, is there some authoritative source literature on that? But it's kind of one of those things where they don't write authoritative source that says, hey, by the way, if we come out with a pronouncement, but you haven't done the event associated with the pronouncement yet, then you don't have to recognize it. No, that does not exist. All I'm doing is quoting every other thing that exists within the tax code, which is basically, when you know it, you do something with it. And the closest thing that we have to this in the tax code, just for all of our loyal listeners, would be things like bad debt, accounts receivable reserves, inventory reserves, all that kind of stuff. I mean, you have book tax differences for those for a reason, and it's called because until you actually incurred, the economic loss, you're not deducting estimates. So, anywho, I'll get off my soapbox again, Gary. Sorry.
There's, I'd say amen to that. So there's no reason for you to.
Yeah, you know how many clients, going back to Jack's line of work, and I'm sure Jack's had the same thing. You know how many times I've been asked the damn question? Well, I'm probably going to lose the lawsuit. Can I go ahead and deduct the expenses this year? Well, have you actually lost it yet? No. Do you know what the actual damage award is going to be? No. Then you may not deduct it. I don't care if you're a accrual basis taxpayer.
All right, David, we're teeing you up on this one. And it's not written in haiku, so bear with me. Interesting discussion on the $2 million debt or audit. Perhaps there's a corollary in the way that the banks are also auditing their internal loans. Even very small borrowers are now being asked for additional documentation to justify their original PPP loan. I'm concerned that the bank may use additional documentation to claw back some of the loan or force a repayment, even if the company qualifies for full forgiveness. Have you seen any client who's gotten through this mini audit and had any consequences? He is not.
I haven't either. And it kind of comes back to no banker in their right mind would want this loan on their books anyway. So I think that what you're experiencing, it'd be great to know. It'd be great to name and shame the bank if you don't mind doing that. I know we've got a bunch of banking friends on the phone, because I'm guessing that the people listening to this call would then go back and say, WTF are we doing? But Nobody wants this on the books because it's unsecured, and if you force a clawback, you're going to ruin your relationship with the bank. So in other words, if I was forced a clawback for something that I believe that I should have been forgiven on, then you're going to have some explaining to do if you want to still be my banker. So what I could see happening though is that I can't really speak to the justification of, hey, prove that you really needed the money or whatever. But what I could see is, since a lot of these loans were made in kind of a loosey-goosey format at the beginning, and there have been cases of fraudulent, shame on, excellent. Now that one I could see. There have been cases of, flat out fraud that the Department of Justice has pursued. If I was a banker, I might ask a few additional questions just to make sure that I wasn't approving a loan that was based on fraud in the first place. They just hadn't gotten caught yet. I mean, that to me seems like something a bank should probably do. In other words, I probably should do some sanity checking on, like, hey man, line 1 on your tax return says that you only have $1 million in gross receipts, yet your 941s that you just submitted to me have $10 million in payroll expense. Something isn't aligning. Which was basically the kind of stuff the DOJ found. I would not want to be the bank that submitted for approval a loan that was based on fraudulent information.
And I think there's also, when we talk about the fraudulent stuff, but there's also, I think, the inadvertent stuff. And I go back to when it was technically clear, but somewhat unclear as to whether or not independent contractors were included and could be included in the head count when applying for the loan. And those people that applied early I have clients that did include that. And so, they're like, well, what do I do? They're still in stasis mode, because regardless of whether they told their banker or not this was a mistake, what do they do upon asking for forgiveness, and how do they deal with all those things? There's another aspect as well, which I think is that as this progresses moving forward, that there's always loopholes. There's always something either purposeful or incidental. And so if the feds go back to the banks and say, well, we're seeing this pattern of behavior, whether it's purposeful or inadvertent, we need you to make sure that this activity isn't going on in these loans. And then all loan documents basically allow the banks to get any information from you at any time. And so you're required to provide that information essentially. So it's not surprising. I agree that it would be bad business to claw back something, even if it's marginal, or especially if it's marginal. But if it's something that's significant, or if it's something that's fraudulent, the banks may take a different attitude about that. But it's, okay, what's a little bit here, a little bit there? Yes, it does add up. But do you want to maintain the business relationship, especially on questionable calls, whether it was allowable or not allowable? Give the customer, the bank client, the benefit of the doubt. So it'll be interesting to see what happens with all of that and the requirements. But it goes back to what we've said all along, which is the banks want a clear line to not being held responsible. And they want it, and the only way that happens is they know what the rules are and they comply with the rules. And if it is, well, these are the 10 items of spot checking that you need to do on a loan, and maybe it's different for the 1 to 2 million and the 2 million and above. So whatever the rules are, and the bankers, they check them off, all 10 of them, and then they process it, and then they're off the hook. Unless they feel that comfort, there's going to be scrutiny, there's going to be hesitation, there's going to be a lot of asking, and possibly asking the same question over and over again. I have clients who said, we've already given the bank this stuff, we've already done this, and I'm like, well, good. Then you have it on your computer. Just send it to them again. It's their problem. Don't get frustrated with the process, because it's mucked up essentially, and slow. So just provide what they're asking for.
Yeah, and I think for the people that that were in the situation when they received more than they should have been due because of the inclusion of the independent contractors. I can really see that both ways. And, frankly, it's going to be one of the few times that I do side with the government, possibly in this next statement, which is, you should have, the window of that happening should have only been maybe the first 4 or 5 days of the application process, which I can understand. Banks were flooded and working, 24-hour days effectively. But at the same time, the pool of applications that you screwed up was pretty negligible. The bank, in demonstration of good faith, probably should have sent a notice out, even if it was just blanket, to everybody that was in that period to say, hey, by the way, we effed up. We might have given you too much money. If this was you, please call us. And then secondarily, just done a quick internal inspection on their end to say, did we, for the people that did the underwriting, did you include 1099s or not? Yes or no? And that just started to work through the problems that they had versus letting it go all the way to the end. So you could really see this one going 50-50. Like in the one case, you could see the government saying, look, you got it under good faith. As long as you spent the money for qualified purposes, you're fine. On the other hand, I could see the government saying, well, what do you mean? We sent out notice after notice. Like, how could you not, like, are you a moron? How could you have not gone back and done something about that? So we just assumed that you would do the right thing. So, it's a tough one. And I think in this specific case, if I were both the bank and the customer, it's like, you just want it to go away, but it's hard to say, submit that baby for approval because it's wrong. And you're stuck in this kind of limbo land. I mean, my gut feeling would be to probably set that off to the side, as a special case, and then keep on moving on. Because if the bank submits it and it's got independent contractor expenses on it, you're screwed. So it, meaning that the SBA, I could see the SBA coming back on that and the bank not wanting to do it. So really the only case where I could see that maybe you have a chance of getting that baby through the goalposts is, I brought them on, like I received the loan with 1099s on it, but I actually spent it on qualified wages that is provable, not the independent contractors. Like that's probably the only good set of facts that you have, and even those are bad facts.
And I think it takes communication. That the problem is there's nothing out there that says if that happened, it could be because your employee count was off or your formulas were off before you put them on the actual true application. So what do you do? And the only thing really we can do at this point is communicate with your banker and say, this is what happened, this is what I did, what do you want me to do about that? Because I got the money from you and I want to comply with it. And I go back to that conversation happens in writing, because if it happens over the phone, it didn't happen. I mean, that's the way you have to look at this. And so, it's a lot of, everybody's doing the CYA thing on all sides. And so you need, as a lender, you need to do it. As a consumer, as a borrower, you need to do it. And until there's clear guidance that says, as Adam said, well, I got it, I was given the money incorrectly, but I used it for a proper purpose. So let me memorialize that at the end of the day, I get 100% forgiveness. Or is it that you get 90% forgiveness and you have to stroke a check back to the lender because of that money that was improperly obtained and was not permitted to be used for something else? So you're out of the right formula. So again, a lot of speculation on our part as to what to do, but the only thing really you can do that we can tell you definitely need to do is communicate with your banker and say, I have this dilemma. I understand at the time when this happened, because this happened to a couple of my clients that were right on it, that did include an independent contractor. And they're like, well, what should we do? What should we do? And I said, well, the right thing to do is to talk to your banker now, but what happens if that now throws your application, spins it out of the process? And that's a risk that you take. So you get to decide your business risk. And in all of those cases, they said, I'm not going to worry about it. I will ask for forgiveness down the road rather than creating a problem with getting the money on the front end.
Good advice. Communication is always at the forefront of resolving issues, I think. But both of the big banks that David talked about, the machines are big and they've been under the heat lamp of the government more than once and for longer than a day. So, I feel sorry for the folks that are having to deal with the confines of those. And I worked at both places, so, and I liked them. But anyway, this is from Pierce. For what it's worth, if you're in construction, the AGC has some great information on their website of contextual background for filing for PPP loan forgiveness for contractors. So if you are a contractor and you're listening to this, go to the AGC. Thank you, Pierce. Good to see you here. Next question is, my 24-week period ended on October 5th. Do I still have time to hire people before December 31 to reduce the FTE penalty?
So it's I believe, Jack, fact check me on this. I believe it's the earlier of your covered period or December 31st, not the later of.
I think that's right. It's been a while since I've looked at that, but I will look while we continue onward to get an answer for that.
Yeah.
Breaking news, no matter whether Joe Biden or Donald Trump wins the presidential election, wealthy Americans can expect to see a Social Security hike in 2021. This just came across because Social Security Administration announced in mid-October the maximum earnings amount will be subject to Social Security, which shows up on your pay stub as FICA. It'll rise to 142.8.
I mean, that's part of just the natural indexing that occurs anyway. So.
Right. But it's breaking news.
On a side funny note, my daughter Eva is in this her AP government class. She's a senior. Her AP government class. There's a lot of the teacher encourages a lot of political discourse back and forth, and she was reading one last night as we went out to dinner. It's like, my friend said that, oh my gosh, if Biden wins, our tax rate's going to be 40%. I said, Eva, what do you think the top rate is now? She's like, I don't know. What is it? I said, 37.5%. It's like, really? It's like, yeah, so ask Olivia if she knows what the top tax rate actually is. She know what it was before? 39.6. So we're not talking the end of days. Here as an example, it's like, the heavens parted, locusts came from the sky. The ocean was boiling because your tax rate went up by 2.5%. Look, I don't like it any more than the next guy. I'm just saying.
Here's the next question.
Well, hold on. You stalled long enough that I confirmed the answer. So borrowers are required to enter the total FTE as the either 12/31 or the date the forgiveness application is submitted, and it's the earlier of those two. So end of the year or the date the forgiveness application is submitted, the earlier of those two date points.
All right, DH, hopefully that answered your question. Next one is, I was one of the groups that closed and had to put the staff on unemployment. I applied for the PPP loan because the unemployment compensation was so high that the employees did not want to come back to work. 350 state plus 600 Fed equals 950 per week. Is that a qualified reason to apply for forgiveness? Also, I applied for the PPP loan before employers were instructed to terminate unemployment compensation if they refused to work.
You're still assuming that you're not going to hit the average FTE count because you still haven't resumed operations to hit the average FTE count. I would have let that dog hunt in terms of the exception, which is basically the people wouldn't come back to work for whatever reason they said they wouldn't come back to work.
Yeah, so unpack that a little bit more, which is that recall that the purpose of the PPP was ultimately to deal with costs of employment, cost of employees, payroll, compensation, et cetera. So you've unloaded essentially those employees onto unemployment. So you don't have that expense. But it sounds like maybe when you applied for the loan, that maybe you have some money, but you can't justify the full forgiveness because of your FTE count. So again, I would suggest that you go through the form and the formulas to see where you end up as far as what you're able to forgive. You know, obviously we don't have all the data points in the question, but you know, recall the purpose, which is that if you incurred the expense, then the program is designed to compensate you for that. If you don't incur that expense by them going on to unemployment, even with the additional amount per week, then you know, that's not your expense. Now, obviously, that was an unintended result, which is people staying at home, watching their TVs and staying on the couch and earning unemployment. And the thought was that maybe that would correct itself when they stopped giving out that money. So again, that's the other thing too, is later on down the road when you're doing the calculations, have you increased are you in compliance with the ratios on the FTE count after the fact within, you know, the period that we just said, end of the year, or the earlier of end of the year, or when you actually apply for forgiveness.
All right, next scenario. We're still in the waiting period to apply for forgiveness. The PPP funds were shown as a liability on our books, but as they were used, they were applied against expense accounts that were created specifically for the purpose of tracking PPP usage. As of today, the PPP loan is shown as a zero liability on our books, assuming we get 100% forgiveness. Is this correct?
So I'll make two points on that. One, because they're kind of a little bit related to the last question too. Like that last question around, you know, hey man, I didn't actually have the employees on the books, but yet on a technicality, you know, because maybe I'm gonna hire some people back now that they want to come back because unemployment benefits ran out. So now I am actually spending the money on people. You kind of hit the technicality of, well, that doesn't make any sense. Loan proceeds not taxable. I didn't have any expenses, but the money was forgiven. You're in better shape than the guy who actually spent the money. But anyway, to this next question, you know, I would generally say relieve the money as you spend it, assuming that you believe that you have a likelihood of being forgiven and that you're not going to get stuck with a note at the end, which is very similar to what we did in the financial disclosure statements for the 2019 audits that we did when we looked at the subsequent event footnotes. So I would be relieving off my balance sheet as I consume the expenses in a very clear category called other income, you know, not as a contra account to the expense, because you want to still present the expense as it really occurred. So for financial statement reporting purposes, you should. But for tax purposes, you know, same advice applies. Like, unless you want it to be taxable income, I probably would have a book tax difference wrapping up this year.
All right, next question. Hey guys, thanks so much for doing this. It's awesome. Just jumped in and been out for a while, but I'm hearing you talk about independent contractors. Is something changed where that will not be allowed if we got money for that? Rewind the tape on this one because we went pretty in depth on that one. This is an anonymous attendee. So anything that you guys would add besides go back to about
well, if you rewind, it was related to people that received funding that included independent contractors that they paid on their application. So if this question was around, hey, I'm an independent contractor and I got money, no, nothing changed on that. You're still should be forgiven, assuming that you follow the intent of the application for forgiveness process.
Yeah, you could take that question two ways. One is if you're the employer, and one if you're the independent contractor. If you're the employer, go back to about 35 minutes into this program and that's when we were dealing with a lot of that. So hopefully that helps. Hey, Richard, good to see you here. And he tuned in mainly for the 80s music. Well, if you missed the first like 5 seconds of this broadcast, you missed. Oh,
Can you hear that? I will say that maybe the reason why I like this song so much as a
That
teenage
song
boy,
is freaking.
it might be, hold on, let me turn this off. It may be because of the photograph, right?
oh my
Teenage boy.
gosh.
Yeah. All right, that's all I had to
Yeah.
say about that.
Oh my goodness.
Jack, the fact that you have Firehouse Anywhere, and please tell me that nowhere on there is Warrant either. I mean,
Hey.
like, I know that some of us maybe liked it and can say, look, I did listen to it when I was a teenage boy, but at the same time, it doesn't mean that I got to have it on my damn Spotify account now.
Spotify Premium family is awesome. You can get whatever you want whenever you want.
Yeah.
Oh,
But all right,
Richard.
this one's for you then.
Well, yeah, this is all for you, Richard.
If it's cherry pie, you're fired, Jack.
Cherry pie.
Oh my goodness. Yeah, well, you just made Richard say.
Well, fun trivia side fact, Jamie Lane, the lead singer of Warren, did marry the model that was in the video Cherry Pie. I believe that's true fact.
All right,
Coverdell married Tawny Katan. You know, evidently marrying your video co-stars was the way to go when you're an 80s rocker.
Yeah, living the fantasy.
Uh-oh. We may be crossing into some ethics violations. We would not want to do this. That's why we have an attorney on here to make sure that we stay in between the guardrails.
Yeah.
You go outside of that, it's your fault, Jack.
Yeah, I'll be getting a phone call from some the Recording Industry Association that I've used 20 seconds of their songs. So,
yeah, exactly. Well, and it'd be one thing if we were charging for this, but it's another thing.
It's actually no joke. Even with the free movie, my son has had his YouTube videos pulled off because he's using licensed movies. So we're begging for forgiveness on this one. Plus, that recording was so freaking scratchy. It's not like YouTube could actually make that crap out anyway. So
that's true. Okay. Next question, and this was a clarification from a prior question. Piggybacking off the prior question, we're recognizing our PPP as other revenue on the 2020 books, but we're not going to submit our application until January or so for tax purposes. Will our shareholders have to recognize the income in 2020, or can we put it off until 2021?
Pending additional guidance under that set of circumstances, it would be put off until 2021.
Right. Okay. Man, you guys had some fantastic.
Well, can I back up on that?
Yeah.
You know, having had a few phone calls with prospects lately, what I would also say is, like, if you don't have a good, I don't know who asked the question, but if you're one of our clients, obviously we're going to pick up on that. But if you're not one of our clients, then just make sure your freaking tax preparer knows that that's what you did in that other income line. Because if they just literally take your books as is and slap that crap on the tax return, it's a good chance it's going to be taxable income. So just make sure that whoever you're giving that information to knows that that's what's in that line and that you have not received forgiveness.
Yeah, I mean, that's a great point. We have similar clients who have put, they've booked the loan as a liability, but on the income side of it, there's you call it extraordinary income, you call it PPP, but it's separate so that it shows that it is not part of the revenue. And what's interesting is in a transaction, it was a stock sale, and there was this money in there, and it was like, wow, they're doing awesome. And like, yeah, where's the allocation of the money for the loan. I see that you've booked it as a liability, but you have all this cash. Isn't that part of it? And they're like, oh yeah. It's like, so like, thanks.
Yeah.
Okay, let's talk about that. And then let's talk about what happens if we buy this company. And, there's all a slew of issues, but then it's like, is that money that's earned by the prior owners or the current owners? And it just get into a slew of things. But
Right.
your point is well taken, which is you need to let your tax preparer know that that money is sitting there and it's not, it's yes, it is cash, but it's not really your cash yet, free and clear.
Right.
So this comes back to the statement that Jack made earlier, which is it's all about communication. And the clarification on this last question was, hey, I'm your client. Awesome. Thank you. Make sure that you are communicating with your point of contact within BGW. Just because we're on this webinar doesn't mean that is going to follow into your
or email me directly if we don't bring it up on the call, because I will then be having a conversation with that person because it's been a part of all of our tax planning checklists. It's been a part of every dang meeting that I've been a part of. So
communication is always the biggest challenge
Right.
in every organization. So you cannot over communicate, it seems like. Except for one of our colleagues, Richard, and I will let last name to be anonymous. He's a very good communicator. All right, Twinette. Sorry, and I'm not sure, Twinette, which question, because you probably submitted a question anonymously, but she's putting a clarification. This applies to PPP funds used to out the employees back on payroll, or to get probably. They were on employment. Sorry, I'm driving. Missed your fault.
Oh, yeah. No. So okay. So I think this is probably related to, this would be the typical scenario where, I could kind of open, but at the same time, they were making 60 freaking grand on the government dole. If that had been me, what I would have done is I would have received the money. Okay, I couldn't spend it in 8 weeks. Fine, got it. I now know that I'm on the 24-week period, but I would have used the 24-week period to then spend 12 weeks worth of money. And I may still have to apply for an exception due to the average FTE count associated with that, but I would have felt good on my court of law testifying before the judge to say, you gave me the money, they wouldn't come back because at the same time, you paid them more than I was going to pay them. But the second that you knuckleheads couldn't get your crap together and stop paying them, I did and used the money in its appropriate intended purpose to bring him back and pay him. So there, case closed.
Well, this has been a good one, man. We had 56 people on this thing, and we answered like 15 questions, something like that. So 14 plus, well, actually a few more, but thank you very much. Again, just like everything else, this will be put up on the BGW CPA YouTube channel, unless they yank it down because we use some unlicensed soundtracks that you could barely make out from Jack's phone and from my phone. And you know what? So here'd be the last question. And you could maybe submit these on our website or submit them to me, but fast forward to next week. Do you think we will still be in the final countdown using, that analogy? My gut is we still will be, but I'd like to know what you think. And even so, even if we are, keep doing what you're doing. You got businesses to run. We got an economy to keep going. So regardless of what happens in Washington and everywhere else. So any other thoughts, Adam or Jack, before we go?
Yeah. Either all the votes will be counted and they will have swung in Trump's favor, or alternatively, all the votes will have been counted it'll be settled, but for the case is being adjudicated. That's how I see it.
Yeah, that sounds accurate. That's our future.
Yeah.
So I'm gonna stick to my Spotify and 80s on 8 for the next week, so I don't stress myself
Yeah,
out.
I think so. And David has weighed in and he says, hold on, it just popped up. My bets are no decision on president until December 15 at the earliest. The lawsuits have to be settled even later. Well, stay tuned. Regardless of what's going on with that, we plan on being back here, same bat channel, same time. And you guys have a great rest of the day, great rest of the week, and a great weekend. Thank you for being here. See you guys.
Thank you.
All right. Thanks, G Money.